Good morning, I'm Pete Seyler, and this is Markets in a Minute for the week of December 8th. Markets traded pretty tame last week, but still managed to advance within a stone's throw of the S&P 500's all-time high. With that said, concerns around AI valuations and worries about future demand were still indeed on display. The most notable news came out of Microsoft early in the week, where a report noted that the company was meaningfully lowering its quotas for sales individuals in their cloud and AI divisions. This sent the stock lower by as much as 3% before paring back later in the day. These concerns are also manifesting themselves in credit markets. While spreads have not necessarily moved that much, the cost to insure against default has risen meaningfully for a handful of these names. This includes Oracle, whose 5-year credit default swaps now trade at their widest level since the financial crisis, and AAA-rated Microsoft, where default swaps cost nearly double what they did just a month ago. On the Fed front, we have our December policy meeting this week, with markets pricing in a 25 basis point rate cut with near certainty. This has not changed on a week-over-week basis, largely thanks to a generally in-line reading on PCE on Friday. That's not to say that the meeting next week will be boring. First off, it will be very interesting to see how Chairman Powell positions Fed policy as we look out into 2026, where just over 2 additional cuts are currently priced in. We'll also be keeping an eye on any dissent on Wednesday's decision, as well as the fresh dot plot. And if we think back to September's dots, there was a great deal of disagreement across Fed governors on the future path of rates. Thanks for watching this edition of Markets in a Minute. If you enjoyed this video, please like, share, and subscribe to get notifications of future video content. I hope you have a great week.